Okay, good morning everyone and welcome to FXPRIMUS. Thank you for joining me today for this will be a Q&A session since we have completed the course. Now guys, I've got a lot of questions that have been sent through. Obviously a lot of them are things that have been covered in the course, so I will try and go over the material again, but obviously not as slowly and as detailed as I did in the webinars. So please, when you have some time, go back and look at the recordings. It's all free and available in the members area. Any problems accessing the videos, then just contact FXPRIMUS customer services who will be able to resolve any difficulties you are experiencing. Okay, so today some questions, Q&A session. I'll try and cover as many of your questions as time will permit. Although some of these questions, they're maybe sort of more asking what to trade rather than how to trade. I mean, I don't really want to be giving you guys trade recommendations because it's not an alert service, and it's not how professional money managers operate. What I have tried to do in the course is show you how to trade for yourself successfully by introducing you to a wide range of indicators, explaining how to use them to set up trade plans and how to then execute that trade plan. So I hope you found that sort of information useful. Please watch the recordings and try and sort of absorb all of that material. Watch the recordings again and again if you have the time, to make sure you're kind of clear with all the concepts. There is more than enough information there for you to be able to trade successfully. Initially you'll do this on a demo account because you're learning, and you shouldn't be risking money when you're learning. Okay, so before I get into some of your questions, by the way, keep adding questions to the chat here if you have anything at all you want me to cover during this session. Okay, all right, well, let's get going. Before we start, let me quickly just remind you that trading is of course risky and not appropriate for everybody. Your past performance does not guarantee future results, so please never risk money you cannot afford to lose. For those of you who haven't been to any of my webinars before, welcome. You've caught the end of a few webinars we've been doing here at FXPRIMUS for the beginner. They're all recorded, so please go back and have a look at them. My name is Petrou. I'm a full-time trader and FX market strategist and guest speaker here for FXPRIMUS. I've been doing these webinars every Monday and Thursday for a few weeks now. I hope I've shared some of my trading experience with you guys. Hopefully it's been a good educational experience. As I said, the sessions are recorded. They're available in the members area. So if you've missed any of the webinars, please go back and view them in your own time. All right, so I'll try and cover as many of your questions as I can. If you have anything you didn't understand from the webinars, or any general questions you have about the markets, then this is the time to this is the time to ask. I'll do my very best to help where I can. Okay, so let's get started. Okay, I've got a question here. Alright, okay. I've got a question here asking what is the best indicator for the US dollar? Right, okay. US dollar. Best indicator. I don't think it's really... that's not a... There isn't actually a best indicator for anything, is the short answer to the question, I'm afraid. Sorry, but that's the truth. There isn't. I mean, I wish there was. That would be fantastic. If there was some great indicator for the US dollar, I could just say, here it is, and I suppose that would be the end of things. Makes the webinar much easier, but unfortunately, that isn't how it works in the real world. There isn't a magic indicator or best indicator for the US dollar. I mean, I can imagine many people have worked extremely hard to try and create such an indicator, and had they done so, it'd probably be worth billions of dollars today. But I mean, to my knowledge, there isn't a best indicator for anything, actually, not just the US dollar. And I guess this is it's quite a common sort of outlook when you start off in Forex, because there are some people that think that maybe there is a special indicator out there that they all need to sort of pay attention to and follow for a particular asset class. So, you know, and I suppose it's quite a natural thing. You get involved in something for the first time and you think, okay, so I want to trade yen. What's a really good indicator for the yen? And you kind of just want someone to say, oh, for the yen, yes, you need to trade the blah, blah, blah indicator. For the dollar, use this indicator. For gold, use that one. It's you know, I can't stress to you how simplified that approach is, and the answer to the best of my knowledge and experience is that there is no such thing as a best indicator for any asset. None of them are the best. There's not one single indicator out there which is the best or will guarantee profits. That's not how the market works, unfortunately. It'd be wonderful if it did, but there is no champion indicator, if you like. It's the great thing about indicators is they all work, but you just need to understand what the indicator is calculating, how it calculates it, and therefore you can understand when to use it and when to ignore it. Yeah, when to use it and when to ignore it. That's the important thing, and that's what trading is, rather than sort of sitting there blindly following an indicator. And I guess it's why sort of some people say that new traders get quite distracted, really, because they're focusing on the wrong things. They're searching for the best indicator, or they're searching for the best time frame, and it's not a sort of a scientific mechanical process, if you like. It doesn't work like that. It's an art, and you're analyzing the market, and then you take the higher probability risks that you've analyzed, and once you've taken that, you need to manage that risk, whatever eventuality the market gives you. So yeah, apologies, but unfortunately there isn't a best indicator for the US dollar or copper or orange juice or gold or oil or the euro, or unfortunately there just isn't. I'm sorry. Okay, I've got a question. How many pips can you make a day? Right, well, how many pips can you make a day? Well, it depends. It's not really, it's not linear. So, and we're not in charge of that. The market is. Yeah. We can only do our jobs, analyze the market, take the trade where it has the highest probability of success, manage the risk, whatever way the market wants to go. And if the market extends, then we make lots of pips. And if the market only moves a little bit, we make a little bit of pips. You know, if it's not really doing much because it's a kind of a Christmassy period, you know, or maybe July, August time, when you get a lot of consolidation and no real movement, then maybe you make nothing at all, or, you know, just break even, small profits. So you find that you don't tend to make the same amount of pips every day or every week or every month. It's not like, you know, oh, I make 500 pips a month, or I make 500 pips it doesn't look like that when you look at when you go over your account and you look back at what you know, how you performed the previous year or month or whatever it is. You'll find at different stages of the year behave differently, and as a result you adopt a different attitude to trading to, you know, accommodate that behavior. So for example, you know, over Christmas, you know that liquidity will drop a little, so you won't trade the same way as you did in November. Well, you'll trade the same, but your expectations will be much less, far, you know, than what they are in November, for example, or October, or whatever. You're looking at a strong trend. If it's Friday afternoon in New York and you know the markets are all closing soon, you tend not to take perhaps a trade that you would have done on a Thursday morning. Similar sort of setup, and the only reason you wouldn't is, you know, because it's unlikely to move a great deal with Europe closed or closing and Asia closed for the weekend. You know, there isn't a lot of new money that's going to come in to the market to help that trade take off and that move materialize. Yeah. So yeah, it's, you know, you can't really, it's difficult to say what you'd make per day. I mean, if you was to take, say, a trade over Christmas period, your expectations of where it's going to go and how far it's going to go, you wouldn't be surprised if it's far less than a similar trade you did, you know, in November. Or if you said differently, if you were taking an exact same trade setup on a Friday afternoon in New York, you know, you're not going to be, your expectations is not for it to move as much as you would expect if it was something you took on a Wednesday, for example, where you've got, you know, still got a couple of days or so of market action, and you've got the Asia banks and the Asian markets and the European banks and markets, you know, still with lots of trading to do. Yeah. I mean, in March, April, May, for example, maybe June, you're kind of looking to catch some swing trades. So you're targeting 200, 300 pips. But in July and August, you don't do that. Volatility tends to dry a little, and basically you're just trying to earn, you know, some scalps. Really, you're sort of scalping. You're not expecting it to you know, to trend 300 pips or 200 pips, or even 100 really sometimes. So, you know, it's a hard time to earn money compared to, you know, sort of now, really, you know, February, March time. Yeah, because you're doing all the hard work, you're doing the same sort of you know, analysis, trade setup, and you're getting 30 pips, for example, or 50 pips instead of maybe 200-300 pips. I kind of take a lot of time off in July. August, pretty much the same as July, but it's worth hanging around and trying to get into some position trades that you will, you know, you're kind of trying to front run what's going to happen in September when all the money comes back into the market and the volatility. So yeah, kind of August time, it's worth trying to get into some positions, and by that I mean trades which will trend for quite a few weeks, you know, maybe even a couple of months or more. September, October, November, you know, usually are quite good months. You'll make a lot of money in those months compared to other months in the year. Again, it's not because you're a genius. You're just doing your job, and the only difference is that the market is trending. It's moving. You know, it's giving up a lot of pips. You know, so something's moving hundreds of pips, whereas perhaps in July they were moving, you know, 50, 60, 80 pips. Yeah. Now you may actually see some poor weeks in those months. Anyone know why? In September, October, November, when the market's trending quite well and there's lots of pips going, why would you see poor weeks in those months? Well, you tend to find that you're letting a lot of trades ride. Yeah, you're letting a lot of the winners run and not taking profit on them for, you know, a little while, but you are taking losses, small losses on things that didn't work out. So when you might look at a small period of a few days or a week and you didn't do too well, it's because you're it's only reflecting the majority of the trades it's reflecting on, not the ones that didn't work out, the small losses. But then when you look at your open P&L, you can see you're up, you know, a considerable amount, and you've got trades open for a little while, and you've added to that position a few times, you know. And then what you'll find is suddenly when you cash out of quite a lot of these, you end up with an enormous month. And it's, you know, you kind of think, oh, you did really well in that month. Well, no, you didn't really. It's just when you took the profit, you know, that trade may have been running for quite a few weeks, so it's, you know, it just wasn't booked, if you like, until, you know, December or whenever it was that you decided to take profit on a lot of the positions you'd built. So yeah, I hope that sort of helps and answers that question. So you know, those of you who are in America, for example, will know that around Thanksgiving, you know, volatility dies down there. Anyway, right. All right. When you're a good, okay. Well, if you're eventually, when you know, you end up with a bit of experience, you'll find that, you know, you're not going to have 90% accuracy, guys. Well, I think in my experience, you're probably looking more like 60% accuracy, 70% accuracy. That's quite good accuracy, you know, and with the way that you manage money, and the size of your losses versus the size of your average winner, even if you had 50% accuracy, you'd do extremely well. So yeah, I wouldn't worry too much about, you know, having a hugely, you know, very high accuracy on your trades. Sort of 60% is good. 60-70% is very good. How many pips in a day? Well, let's assume you're quite a good trader. I'll say it differently. Let's say you're quite good at your job, and you can probably pick up 50, 60%, 70% of any particular one-day move. Yeah. So the answer to the question is, how many pips did the market move in that day? So if you can pick up 60% of any given day's move, how many pips did the market move that day? Oh, it moved 200. Oh, so I've done quite well. Made 120 pips. Oh, but it only moved 50. All right, so okay, you made around 30 pips. See what I mean? So you're reliant on how many pips the market moves, and the market moves a different amount of pips every day. So yeah, don't look at it so black and white. I make X amount per day, and I need to make X amount per day, because it will vary, you know. Okay, question. I follow strategies and indicators, but I still lose money. I follow strategies and indicators, but I still lose money. Right, okay. Well, I need a little more information than that. But look, one of the most common reasons people lose money is, I think, because they can't really make their mind up if they're a bull or a bear. They can't make their mind up. Am I a bull? Am I a bear? And the reason behind this is because they probably only look at the charts and indicators and pay much less attention to the fundamental economics or central banking policy. So if you're a bull or a bear, if you've made the decision, stick to it and see if that helps you. Yeah. So let's say you started off the day as a bull, or the week as a bull. Try this to see if it helps. Say to yourself, I'm going to stick to this for the rest of the day, regardless of where the market's going. I'm going to be a bull, or I'm going to be a bear. The reason I tell you that is because you probably find that if you change your mind throughout the day or the week or whatever, you probably find that you end up missing trades. Yeah, because you hadn't made your mind up if you were a bull or a bear and sort of stuck with it. Let me try and let me just show you something quickly. Hold on. All right, okay. Let's just look at a chart. It doesn't matter what it is. It doesn't matter what time frame it is. And in fact, just to avoid focusing too much on indicators, I'm going to remove them and just leave one. Just one. No, I do trade with more than one indicator, but it's just to illustrate a point that you don't need to. You don't need to have lots of indicators. Okay, so I've got here a chart. Got nothing, no moving averages, no stochastics, no MACD, no cloud, no ADX, nothing, no Bollinger Bands, nothing, no RSI. Just a chart, and I've just got pivots on there. Standard pivots. Oh, screen's frozen, one second. Okay. All right, just one moment. Right, okay, so this is what I mean. Let's just pick bull or bear. Yeah, let's assume we know nothing about economics. We haven't read any of the OECD reports. We don't bother reading central banking minutes, meeting minutes. We don't even know what the Fed Watch tool is or what Commitment of Traders report is. All we know is that we have a chart and we've got a few pivot points, standard ones, so you can just calculate them. Yeah, high, low, close divided by 3. Yeah, so nothing sophisticated here. And what we're going to do is we're going to have two rules. We only buy at support and we only sell at resistance. That's rule number 1. And we're either going to be a bull or a bear. No changing. Yeah? Okay, one moment. Right, okay. So let's look at this chart. What should we be? A bull or a bear? We can only be one. Yeah, it doesn't matter. I'm going to do both. So we'll start off with being bulls. Okay, let's start off with bull. Bull. Okay. So we are bulls, so we can only buy at support. Yeah? Simple as that. So where's support? Support is... What's that there? That pattern. Is that not a double bottom? Well, it's actually not a double bottom until we get this higher high here. Yeah? That higher higher there, you see that? Okay, so now we have a double bottom. Where do we buy? Well, we want to buy at support. But we don't have any moving averages to help us, any RSI. We've got no MACD, stochastic, ADX, PISA. We're not using the cloud. What can we, I'm just trying to show you here, you don't need a whole load of indicators on your chart. But what we can clearly see is there is an area of a role reversal here, isn't there? Can you see there where resistance? And now it can become support, can't it? See that resistance there? Just a bit slow updating. There you go. That there, you see the grey box? That's resistance, right? How do we know it's resistance? Well, we know it's resistance because price was going up, but it stopped and it couldn't go any further. And then it came down. So that must be resistance. So we drag it across, yeah? And if price falls down to this level here, we can look to buy. Yeah? All on there? Good. What can we use to determine if we should buy? So the price has come back down. It's come back to that grey area where we've highlighted, role reversal, support. What do we now do? Do we just buy? Or do we, what is the 4-hour chart? So we can afford to drop into a lower time frame, guys. Yeah, and look for some bullish activity. What do I mean by bullish activity? Well, maybe there's a daily pivot point. I mean, this is a 4-hour chart with weekly pivot points. So maybe when I drop into a 15-minute and I show some daily pivot points, maybe there's a daily pivot point there. Maybe we have a change of trend happening on the 5-minute chart. Yeah, maybe you have an RSI or a MACD or stochastics or whatever it is whatever indicator you'd like to use. They're all good as long as you know how to use them. And I've gone over how to use a lot of these indicators in the webinars. Or maybe you're just looking for a candlestick formation. Yeah, we've done that in the webinar as well. It doesn't matter what you're looking for, because what is important is you're not just looking for it randomly anywhere. You're looking for it here on the 4-hour, on the larger time frame, the higher time frame. You're looking for it as, because we have support here, you're trading off of this higher time frame support area, and you're just going to a lower time frame, yeah, to find some bullish activity. Now don't concentrate on the 4-hour chart as in, oh, it's a 4-hour chart so I should trade for it. If this was a 1-hour chart, it's exactly the same thing, but you know, maybe you drop into a 1-minute to time that 1-hour chart entry. I'm looking at a 4-hour chart, so I'm thinking, okay, maybe I can go down to a 5-minute, maybe a 10-minute, maybe 15. Just a lower time frame, something that's going to give me some bullish activity on the lower time frame. Yeah. So we haven't got any indicators on this chart, so let's just say you saw on the 5-minute chart, once you've hit that area, that grey area there, you then drop down to a 5-minute chart and you see a higher high or a higher low developing on a 5-minute chart. Yeah, great, we have an uptrend on a 5-minute. Maybe you saw a double bottom on the 5-minute. Yeah, great, that's a bullish signal. Yeah, so we buy on the 5-minute, stop lower low on this time frame, 4-hour. Yeah, because we're trading this time frame, we're not actually trading the 5-minute. Yeah. So we end up with something on that smaller time frame, and now the question is, where do we take profit? Where do we take profit? Well, it could be a Fibonacci extension, it could be previous resistance, it could be a pivot point like an R2, yeah, something that's a leading indicator, and we've gone over these again in webinars. Now what we have on this 4-hour, once that higher low develops, yeah, and it develops and it goes up, we've got a higher low, which I've circled there in purple, to the previous low. Yeah, we've got a higher high and a higher low, so we're in an uptrend. Okay, so you're long at the purple circle. Now what happens? Well, we get another higher high, don't we? Just here. Yeah, price goes up, makes a higher high to the previous high, so we're in a trend. So what do we do now? Well, the bulls have taken this market up, yeah, and we're bulls, so we're looking to do what? Same as we did before, buy at support. Yeah, there you go, there's your higher high there. So we're looking to buy at support. That's it. Remember, we're not allowed to sell, as in go short. We're allowed to sell and take profit. We're not allowed to short because we're in a, well, because we decided we're going to start this, do this entire chart as a bull. Yeah, we're going to only be bulls. We're not going to change just because price is coming down. Yeah, we're going to stay as bulls. So what we're going to do now, we're going to buy. Where we're going to buy from? Support. Okay, so where is support? What about role reversal like we did last time? Yeah? There you go, in grey. What happened? Did it work? No. Okay, why? Well, maybe when we got to that area and we dropped down into a 5-minute chart, we didn't see any bullish trend. We didn't see a double bottom, higher high, higher low. Yeah. So what do we do now? Price is still falling. Price is falling. Shall we sell? No. We're not going to become bears just because price is falling. We've decided we're going to be bulls. We're going to stay bulls just for this experiment. And remember, because we're bulls, we can only buy. So what we're going to do now? Price is falling. Yeah, price is just falling. It's falling. It's falling. What are we going to do? Well, we look to buy at the next level of support. That one didn't work. Where's the next level? What about this here? This central pivot point. Yeah. That black line there. That's a central pivot point. Yeah. Should we try that one? So price gets to there. Do we just buy? No, we'll do the same as we did before. We'll drop into a smaller time frame, like a 5-minute chart, and we'll look for some bullish activity. Yeah. Again, it can be higher highs. There you go, just highlighting the central pivot point there. It can be higher highs, higher lows on, say, a 5-minute chart, or even a 1-minute chart if you like. You know, just something small, just to give you an idea if there's other balls there at that central pivot point. Yeah, it doesn't have to be that. Maybe you're using the stochastic, so you're looking at a 5-minute oversold on the stochastics. Maybe you're using ADX. Maybe you like chart patterns. You're looking for a hammer on a 15-minute chart, yeah, or a morning star. It doesn't matter. What's important is that we're at support on this 4-hour chart, and we're bulls. And what do bulls do? They buy at support. Yeah. So we can either simply buy, or we can buy when we see bullish activity on the lower time frame. Okay, now what? So price then goes up from there. Yeah. And we hit resistance. Where's the resistance? It's that R1, weekly R1. That's resistance. So what do? Do we take profit? I don't know. Maybe. What was your trade plan? Did you plan to take profit at the R1? Yeah. Or are you building a position now because you're in a trend? At the moment, you've got 2 successful trades. Yeah, one at the purple circle and one at the central pivot point. Let's assume you don't take profit. Yeah. We make a higher high. What do you do now? Shall we try that role reversal thing again? Yeah. Resistance here, will it become support? Yeah, so price has gone up to that R1. Hit the R1, we didn't take profit. It's come back down. Where do we want to buy again? That light blue shaded area. Because that's role reversal. You see, you've got resistance, which then becomes support. We spoke about role reversal in the webinar as well. So where are we going to take support? Well, what about see there? Goes up, makes another higher high. Yeah. Now what? Price then comes down. I think you understand the picture, yeah? We're just buying at support. We're bulls. We're only allowed to buy at support. Yeah. Now look along the chart, further along the chart here. So this price comes down. I don't know, maybe you took profit at R1. I don't know what your trade plan is, but price then comes back down again. Okay, where are you looking to then buy again? Where's support? What's this green line here? That black line's the central pivot point. That green line is support 1. Yeah, support 1. Have you noticed we haven't changed our bias here? Even though prices come down a hell of a long way, we're still bulls, where all we're doing is buying at support. Yeah, we buy at support, and then what happens? Yeah, goes all the way up to a weekly R2, and everybody knows that you take profit at R2 or S2. Yeah. So what do we do here when we get up here to R2? We take profit. Do we then short? Because, you know, we're at resistance and we want to short to sell. No, we don't. We can't, can we? We're bulls. We're not allowed to short. Should we try roll reversal again? Yeah, roll reversal. This area here becomes support. See if that one works. It doesn't, does it? So where do we go now? Do we become bears because the market's coming down? No, we don't. We stay bulls. Where's the next point we can try? We can try the S1 pivot point, can't we? S1. We buy there. Yeah, and so on and so on and so on. So we have 5 or 6 good trades here. We wouldn't have got these if we kept changing and becoming bears and then bulls and then bears. We wouldn't have been able to prepare for it, and you would have missed them. Yeah. Sometimes you find people, they say, oh, I was buying and then, oh, it wasn't working and I decided to sell, and then just when I decided to sell, now it's going back up again. Well, just stick to one or the other and see if it helps your trading. Now, I said I'm going to do bulls, but I'm also going to do bears on the exact same chart. Yeah? And then I think once we've done bears as well, you'll see what I mean. Okay. So let's look at the same chart. Let's clear all this. Let's get it all clear. Right, and this time we're going to be bears, yeah? So let's put bears here. Bears. Right, and because we're bears, we're only going to sell at resistance. Good. Okay, so where is resistance? Right, so the market's coming down. And then we get a pullback to, what's that black line there? Central pivot point. Yeah, so we short at the central pivot point. So central pivot point is resistance when you're in a downtrend. So short here, standard stuff. Yeah, we did pivot points in one of the webinars as well. Now this time it didn't extend. So maybe you took profit at this double bottom. Yeah, so you've sold there where that purple area is. And again, you did the same thing. You dropped into a lower time frame and you looked for maybe, you know, something to develop there, and a double top maybe, something with a lower high, lower low, if you want to use stochastics or something else, something on that, say, 5-minute chart which was bearish. and then it comes down and it kind of double bottoms. Yeah, and you're thinking, oh God, no. And then it comes up a little bit and some more bears get in and sell, but this time it doesn't even go as far as the double bottom, it higher lows. Yeah, and maybe you didn't take profit at the double bottom, but once you've seen this higher low develop and price coming up here on a higher low, then you are, you know that this double bottom could well be in play. Because otherwise, why have we got a higher low here? It means people are buying. Yeah. So price comes all the way up, and either you've taken profit here at this higher low area, or you've just left it and it's come all the way up and it's taken you out break even. Right? Either way, you definitely didn't lose any money here. You either made a small amount of money or you broke even. Right? So now what? Do we buy? Clearly market's going up. Look, it's making higher lows, higher highs. We're in a bullish market. Should we just start buying? No. For this exercise, we're going to just show how it's good to stay a bull or a bear. Yeah, so we're just going to stay a bear for now. Okay, so where is resistance now? Now that market's gone up there. Well, what about this previous high? That was resistance. Maybe we'll get up to this area and market will behave the same again. It would come down. Yeah. So we drag that across and we draw a line, shaded area, and we say that here was a previous high. This was resistance. Will it be resistance again? We don't know. So we have a little shaded area, or maybe just below that the R2 resistance. Yeah, that's another resistance level. And again, we just drop into a smaller time frame, and when you reach that level, you look for some bearish activity because we're bears, same as before. And we take a short, because clearly we do get bearish activity. Otherwise, the 4-hour chart wouldn't have shown it coming down. So we know that if we dropped into a 5-minute chart here, you'll see some kind of bearish activity. Where do we take profit? Again, I don't know what your trade plan is, but maybe you're targeting this previous area of resistance here, the purple circle, yeah, and thinking it's support, because that's a roll reversal area. So let's do that in like that. Yeah, see that there? So you've got this area here, which incidentally price did come off and go up, and then you've got this area here, which was another area of resistance, now acting as support. Now, are you going to buy there? No. You're a bear. It says it up here in red. Bear. B-A-R-A-R. I'm a bear. I can only sell, and I need to find resistance. Now, because this chart isn't a downtrend, you may well have targeted that area as a profit target, because you're not going to be very aggressive, you see, when it's not a downtrend. But I mean, I don't know what your trade plan was, but you certainly would not have lost any money. Yeah, I mean, it didn't extend into a big downtrend, but you definitely moved for, well, these are 4-hour candles, 1 2 3 4 5 6 7 8 9 4-hour candles, so it's 36 hours of down price movement. There's no way you didn't at least break even, at the very worst break even. So then you might try again here at resistance. Yeah, when's the next level of resistance? Again, you would have been up just there. Again, you would have been up enough pips to either take in small profit, yeah, you see there at the R1, you either would have taken a small profit or, very worst case scenario, broke even. Yeah, and same again here at resistance. Next level resistance is there. The R2, you would have done the same there. I mean, that was a huge move down. You know, you definitely would have locked some profit in there. And again here, another area, you know. So at the very least, some small scalps, you know. At the very worst, I mean, if you're just completely blasé, you've taken quite a few break evens. You have not lost any money. Yeah. And why? Did you not make lots of money? Well, you didn't get direction right, did you? Direction's up, you're a bear. But the point I'm trying to say is you stayed a bear, and so even though you got the market direction wrong, you still made money, just not a lot of money, as you would have done if you got market direction right as a bull. Yeah? You gave yourself the opportunity to make money. If the market had turned bearish, which it could quite easily have done, you would have been a hero with some of these entries, wouldn't you? You would have made a lot of money as it moved down because you got some great entries there. Okay, it wasn't to be this time, but your time will come. And the problem is when you don't know if you're a bull or a bear, and you're buying 1 minute and selling the next. And that's where you miss these opportunities. And guys, I've seen traders' accounts where they're going long the US dollar, then they're going short the US dollar, then they're going long the US dollar, all in the same day. And I don't really, you know, I know they don't have any long-term bias on the US dollar, and as such, will not benefit when the trend comes. I mean, they make money, but I find it really hard work scalping around all day. Okay. You got this short here as well, you see. Area of resistance, another big move down. So, same chart, bull made lots of money, bear made some money. Yeah, did you get the point? Okay. Question. I want some information regarding the gold and the pound yen price movement, the trend for the next week this month. I want some information regarding the gold and pound yen price movement / the trend for the next week. I want some information regarding gold. All right, so okay, so again, this is another question of more. What should I do rather than how should I do it? And guys, look, I really want to help you. I do. I mean, I hate it when I hear people have put money into a trade account and sort of gambled it effectively away. You know, there's a lot of charities out there, and they'd make a better use of that money, really. So we need to be careful with our money when we put it into a trading account. We need to make sure we learn how to trade before we go risking any money. And we need to be careful not to fall into the trap of always relying on other people to tell us what to do, or relying on recommendations for other people. You don't need to spend your career asking other people, you know, what you should do. You can learn how to do it, and it's free, guys. It's free. It won't cost you anything but time. It's the only thing it'll cost you, some time. But regarding this question, information on gold, okay, I mean, I'll answer the question, and I'll answer it in the same way, actually, from the perspective of a bull and from the perspective of the bear, because you haven't told me if you're a bull or a bear. You just said you want some information regarding gold So, okay, yeah, what I'll do is we'll have a look at gold from the perspective of a bull and from the perspective of a bear. We'll set up 2 trade plans and I'll let you decide what team you're on. How's that? Yeah. No, I think it's best to do it that way because it will make you think and it will make you learn. Yeah. So, okay, gold. Right, guys, what makes gold go up, for example? Anti-dollar, yeah. No, what I meant is, what's driving the gold right now? Anyone? Negative interest rate, guys. Negative interest rates. Yeah? Negative interest rates means it costs you money. At least with gold, it doesn't cost you any money. Okay, so let's look at a trade plan on gold. Let's do that. Okay, so this is a 4-hour chart on gold. Nothing on there, I've just left weekly pivot points again. That's it. Just so we can keep it clear and simple. You can add other indicators if you like. I mean, I like to use an oscillator. I like moving averages. I mean, I like all the indicators. They're all good in their own way. It doesn't really matter what you use. This is enough to form a trade plan. Okay. So you're a bull. Yeah. This is an example of a bullish trade plan. People out there who are looking to buy gold bulls, this is the sort of thing they're looking at. So the person who asked this question didn't tell me if they were a bull or a bear, so again I'm going to do both, and yeah, we'll start off with bull. Okay, so we want to buy gold. So where on the chart is support? Unfreeze that actually. There you go. Should be, yeah. So where on the chart is support? We're currently at, no, we're just looking going forward now. We're not going to look at the past. We're going to make a trade plan for the future on gold. Yeah? Because that's what the question was asking. Yeah, what's going to happen next week and next month and the trend. I mean, nobody knows what's going to happen, but I can tell you what the bulls are saying and I can tell you what the bears are thinking as well. Yeah, and then you didn't tell me if you were a bull or a bear, so you've got both perspectives there. So at the moment, everyone, you can see that we are at resistance, right? All agreed? Yeah, there you go. That grey shaded area, you've got previous price action, price has gone up, up, stopped. Resistance here because price has come back down. It's tried it again, got to the same area and stopped and come back down. So clearly that area is resistance. And we've tried again here and got a little bit higher, but still not much higher than where we went before. And that's from around middle of January to now, not being able to break that high. So you've got these previous highs here that the market could not break that level, so we are at resistance, which means what? It means you can't buy, yeah, which is unfortunate because we're bulls. So what do we do now? I mean, we can only buy at support. So what are we going to do with gold now? Well, this is what the bulls are going to be looking at. Let me show you. We're going to wait for that resistance to break. Yeah, like that. Wait for the resistance to break and wait for price to come back like this. Yeah. There you go. So price is going to hopefully break this resistance area That's what you want as a ball. And price comes back to the resistance area, which now may act as support. Yeah, role reversal. So we wait for a higher high, and then we wait for a pullback to this area of support. Now we look to buy. Yeah, and hopefully price does that. We're buying at support. Okay. Now, if you want to draw a trend line here, I'll do it here in red. I don't know if you like trend lines, but again, it's something I've explained in the course. So, you know, we've gone over how to trade off trend lines, etc. Maybe you draw a trend line, and when price comes back to that trend line, which is also roughly where the where the grey box area is, somewhere in there, you drop into a smaller time frame and look for bullish activity. Yeah, maybe you don't like trends. Maybe you prefer Fibonacci, for example. So you draw a Fibonacci, and you'll get this area here. That's going to be your 382, 38.2% to 61.8% zone area, somewhere around here. Yeah. So you can buy in there. Stop below the 786, or stop below the lower low on this time frame. Yeah. And you buy in that somewhere in that area. And how do you buy in that area? Again, well, you can just buy, or you can look for bullish behavior in that area on a smaller time frame. So hold on, let's do that. So for example, you drop into a smaller time frame, 5-minute chart again, for example, and you look for maybe something like this. Yeah, you get a higher low and then a higher high. Yeah, or maybe you get, actually this would be better, hold on. Maybe you see this, a double bottom. Yeah, you see a double bottom, and you trade that on the 5-minute chart like this. Yeah, but remember, you're not trading the 5-minute double bottom. Yeah, you're trading the 4-hour chart. But once you've got into that purple square area, you've dropped into a 5-minute chart, and you're looking for some kind of bullish activity. And of course, a double bottom on a 5-minute chart is bullish activity. And the idea is it sort of gives you a better timing. You know, time the trade a little better. Yeah. So you buy there, get that higher low after a double bottom. Yeah. As we're talking about this timing, actually, there's another question here. Let's address this question as well that we have from someone, because it's kind of asking the same thing. He's asking how to optimize the entry. It says, please advise how to optimize entry. I know the mantra, long at support and short at resistance, but actual action harder than theory. Any other entry ideas are appreciated. Okay, so let me just read that again. So please advise how to optimize entry. Right, okay. I know the mantra, long at support and short at resistance, but actual action harder than theory. Okay, well, so here we are. This is answering your question as well. Actual action. This is the action. Yeah, you're in this area, which is support, and now I'm telling you, when you get to this area, you drop into a 5-minute chart. Price is actually coming down on the 5-minute chart. Yeah, it will do because price is coming down. You look for something like this, a double bottom, higher high, higher low, you buy. Yeah, or maybe you see a higher low, higher high, higher low, you buy. Yeah, is that sort of better for that optimize things? Yeah, so this is what's actually going to make you press the buy button. Yeah, when you see this on the 5-minute chart. But not anywhere. It has to be in that. We have to wait for price to get into that sort of that area that we've said. You know, maybe it's at the trend line, or maybe it's in this purple box if you're drawing a Fibonacci. Then you look at the 5-minute for something like this. Yeah, not just anywhere. Yeah. Is this what the question wanted? The optimize entry question? I hope that's what you were referring to. Yeah, you said you understand the long at support mantra. Okay, so that's this here, isn't it? Entering at support on the 4-hour chart. But how do we optimize this? Well, one way is to drop into the 5-minute chart, wait for bullish price action pattern, like this double bottom. Yeah, and the entry is there. Because we've got a double bottom confirmed by that higher high. Yeah, the higher high there. And we go long at the higher low. But our decision to go long wasn't created on the 5-minute chart. It was created on the 4-hour chart. Yeah. And if you're right, price will keep going up like that. Maybe you like to use stochastic indicator. Yeah, I don't know. I mean, you didn't tell me in the question what indicators you like, but let's say you like to use stochastic. So you've got this kind of sideways action going on the 5-minute chart. Yeah, it's slowed right down the downtrend, and you're looking for an oversold stochastic signal. You know, anywhere along here. Maybe it's this point, maybe it's somewhere else. It looks something like that. Yeah, there you go, 5-minute oversold. Because you've already identified support on the 4-hour and decided you are now buying. You just want anything bullish on the lower time frame to make you feel more comfortable with your timing. Yeah. Okay. It's just an oversold stochastic on the lower time frame. Okay, so what about this gold question? We've done the bull trade plan going forward, yeah? What about if this person who asked this gold question is actually a bear, not a bull? Yeah? If he is, then all of this stuff here means nothing to them because they're only looking to sell gold, so they're not looking to buy gold. And why would they be looking to sell gold? I mean, gold seems to be going up and up and up in price. You know, why would they be bears? Well, they may have very good reason actually to be a bear. I mean, fundamentally speaking, why would you buy gold? What's driving gold up? Negative interest rates. Yeah, and what's happening to interest rates? Are they sort of going down and further down, or they're not, are they? Interest rates are rising generally, aren't they, around the world? Yeah. I mean, we even had good data out of Japan last week, of all places. So why would you want to invest in gold when interest rates are rising? Safe haven? Well, so are the bonds, aren't they? Bond market, that's a safe haven. And you get interest. Let's say, I mean, the only people, who are really lagging behind are the Europeans. So let's say the ECB in the coming months moves interest rates from negative to zero. What do you think is going to happen to gold? That'd be bye-bye gold, wouldn't it, really? Yeah. People would just dump gold. Probably see it crashing down to $1,000, maybe even below. Yeah. Why stay with gold when you can get interest, or at least not be charged interest with the prospect of further interest rate rises coming. So maybe the person who asked this question is actually a bear on gold. So let's do a gold short trade plan. Okay, so we clear all this. And this time, as you can see, let's put a daily chart. 1 second, guys. There's a daily chart here. Got monthly pivot points. Right, there you go. Okay, so yeah, this is a daily chart, and as you can see, there's something interesting going on with the monthly pivot points. We're at monthly M3. I mean, we're just above it a little bit, but roughly around the area. What does pivot point theory tell us, guys? What will happen? We've opened at roughly the M3. If this ends up being the top of the month, M3, what do pivot points predict? If this is the high of the month, what do pivot points predict is going to be the low of the month? Where are we going? Well, if this ends up being the high of the month, then the pivot points suggest that M1 is where we're going. That'll be the low, which is here. Yeah, that's M1. And as I said, we covered pivot points quite well in one of the webinars, so hopefully quite a few of you followed that and have seen the recording if you've missed it. It is all recorded, guys, and it's free, so please take advantage of it. Go back, as I said, in your own time and view the recordings when you can. That's why I recorded them. If you've got any problems at all finding the videos, contact FXPRIMUS customer service. I'm sure they'll be able to help you with any trouble you're experiencing. Okay, so how do we get into this short trade? Because we're bears. Well, we want to see a reversal pattern, don't we? And what's a reversal pattern? Well, why do we want to see a reversal pattern? Well, this is a daily chart, and here you can see these daily candles going up, 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 which means on a 4-hour, this is an uptrend, and we were looking at a 4-hour just before, weren't we? So we know it's an uptrend. So in a 4-hour chart, it's an uptrend. So the 4 hours got to turn around really before we can see this drop. And in fact, we've also got this higher low here on the daily. See that? Which is not very bullish behavior, not very bearish behavior at all, is it? Higher low. So, you know, it's a little bit risky here. Thinking that, you know, this is definitely going to hold. I mean, we don't know that at all. So we need some kind of reversal pattern, a bearish pattern, before we can consider getting into this. Yeah. So let's look for bearish signals in this area, because this is clearly resistance. Will it hold? I don't know. Nobody does. Nobody knows for sure if this will hold. That's why we all do trade plans, and to increase the probability of our trade being successful, we analyze and form this trade plan, and then once we take the trade, that's why we have money management, in case it goes wrong. Yeah. So again, we'll just drop into perhaps a 1 hour or a 15-minute chart, seeing as this is a daily, and we'll look for the same things we discussed earlier. Maybe a double top this time, maybe an overbought stochastic if you like to use stochastics, or maybe an RSI, Now if you see a higher high, then you get out. Yeah, you get out and you try again. Because if you see a higher high, then that means, you know, that we're not turning around on the lower time frame. Why would I want to be, you know, why would I want to be in the trade? The only way this is going to turn around and head down and follow that red arrow is if we see some bearish activity on the lower time frame. You know, if the lower time frame then changes back and has higher highs and higher lows and starts moving up, then, you know, that's the end of that, and we'll try again. We'll try again if it's in that area and it shows again another reversal pattern or some bearish activity. We can try again. Otherwise, where else can we try again? Where else is there resistance on this chart? What about here, where we've put this shaded grey area? Yeah, that's role reversal, isn't it? And it's also a monthly pivot point. Yeah, what is that there? That's an M4. Yeah. Or maybe, what about a little bit below that, that monthly R1? That's resistance, isn't it? Maybe when we get to this R1 area here, we'll, what have we got here? Hold on a sec. Wait till we get to this monthly R1 area. That area there. You drop into a lower time frame. And you look for bearish activity or a bearish signal at this area of resistance on the higher time frame. You can take a short, assuming you're a bear, of course. I mean, I don't know if you're a bear, but we've got two trade plans here for the person who asked about gold. We've got a bullish trade plan and we now have a bearish trade plan. So I hope that sort of answers your question over what's going to happen to gold over the next week or month. Okay. Right, yeah, and this is a question. Now, if you guys remember, I did on Thursday, if any of you guys were here, I did a trade plan on Thursday regarding news trades, remember? So I'll just show you that here. Remember we did that news trade thing? This is a slide from Thursday. If any of you guys were here, and we said, because tomorrow, we said at the time Thursday, so Friday we were going to have non-farm payrolls in the States. It's a big event-driven strategy day. I thought I'd quickly show you how to trade a news event like non-farm payrolls. And we've got a question that asks about strategy and why we don't focus more on emotion. And I think this would be a good example to show how emotion affects people's trading. So the question here is, if strategy is 15%, this was a question sent in by email, if strategies is 15%, why are all traders focusing so much on it rather than focusing on money management and emotion with greater percentage? Is there any books that you recommend to trader in profiting in market? Thank you. All right, so from what I understand there, what you're asking is, you're saying that if strategy is 15% of trading, why are so many people focused so much on strategy rather than on money management and psychology. So emotion, you mean psychology, so which are a greater percentage of trading. And you're asking if I know any good books to recommend, etc. So I didn't know 15% is strategy. I don't know who comes up with these numbers. I don't even know how they calculate that, by the way. But anyway, it doesn't matter. Basically, your question is asking about money management and psychology, right? Good books on psychology. I can say I have read a few good books on psychology. It's been a few years now, so I forget the names of them. I probably ought to do a webinar dedicated just to trader psychology, because it is quite an important aspect of trading. I'll try and put one together soon. I've got a lot on at the moment, but I'll try and sort of clear some time beginning of next month, and I'll spend an hour on this with you guys, because it is quite an important subject. Unfortunately, even with a good strategy, you're right, even with proven rules, many traders just can't stick to them because the psychology gets the better of them. And a good example of this was on Thursday, where I set up, I showed how to do a news trade, and because we had non-farm payrolls on Friday, yeah, so I did this webinar on Thursday and I explained to people how to trade that particular event. And if you followed what I said on Thursday, there's no reason why you wouldn't have made pips on a few different pairs, even though it wasn't the best of moves on Friday. So this slide was the one I used on Thursday, where I explained how to trade news events. Yeah. So I said you wait for the news to come out, so the news is released there, yeah, and you see the market spike one way or the other. In this case it spiked up in this illustration. Yeah, it's an emotional trade, so be very careful. I said it's a higher risk than normal. And in this illustration, price jumps up when the news is released. Yeah, just there. Price jumps up, green candle, yeah. We wait for the pullback. Yeah, you start seeing red candle, you wait for that pullback, you draw your Fibonacci retracement tool, which is those grey lines there. And what we're looking for is to buy. Why we're looking to buy? Because the market spiked up, you know, market spiked up in response to news. So we're looking to buy between the 38.2% and the 61.8% retracements. Yeah. And guys, if you don't know what Fibonacci is, again, it's in the course. I did a whole video on it. It's free. Please go and watch it in your own time. And this, by the way, this Q&A session is recorded, so you can watch this again in your own time. So price starts. Hold on. So price starts to come back into the Fibonacci zone, and now once we're in that Fibonacci zone, we just want to see some kind of green, anything which looks like we've got hesitation and there's some balls getting in. Yeah, so where I've put entry there, I'm showing there's just a little bit of green, and that's all you need. Don't wait around. You haven't got the time to, you know, it's just a news trade, this, guys. It's a fast trade. You've only got like maybe a 30-second window, if that, to try and get into this. Yeah, so you see green, you enter. Stop below the 786 and you're done. Right? And if it works out like it should, then you'll very soon see price going up, within very small amount of time, because other balls will be getting in as well. You'll see price going up, and we can take our profits at the Fibonacci extension or an extreme pivot. Yeah. So that was on Thursday. What happened on Friday with non-farm payrolls? All right, let me show you. This was dollar yen. Hold on a sec. Okay. Yeah. So this is dollar yen. A big spike down. Yeah, news is released. Big spike down. Big red candle. Pull back. This black line here is the Fibonacci zone. Yeah, you've got the 382, 50%, 618. So a pullback into the Fibonacci zone. Yeah. And then what? An extension. Down, down, down. Yeah. So a pullback into this yellow area, which is the 382 to 618. Yeah. Yeah. So price, to start again, price fell as soon as the news was released. Price fell. That's that big red candle. So we know we're looking to sell, because that was the reaction from news. We wait for price to pull back. Yeah. Doesn't always pull back. If it doesn't pull back, then we don't trade. If it just carries on, that's it. There's nothing we can do. We'd leave it. Yeah. Here it pulls back to the Fibonacci zone, just like we discussed on the Thursday, the day before. Yeah. To the Fibonacci area, highlighted here in yellow, and we sell at any sign of red. Stop higher than the 786. Yeah. And the market soon extends downwards. Yeah. Soon extends downwards. And it didn't extend a whole great deal in terms of, as far as non-farm payrolls are concerned, but you can see there was quite a delay here. There was a fight. Usually it sort of pulls back to here and then you're off, and there isn't. But here we had quite a few candles before it got going, and then it sort of came back up again. But eventually it came down. Not a great deal of pips, but I don't know what it was there. There was at least not a 50 pip move, more than a 50 pip worth. So yeah, and here again on pound yen, that was dollar yen. There's pound yen here. Same principle, same trade plan, same rules. Yeah. Market spikes down. Yeah. We get a pullback again into this sort of yellow area, the 382 to 618 Fibonacci zone. And we get an extension all the way down. Okay, and that one moved, I don't know, getting another 70 pips or whatever that was. Unfortunately, what you find is that many traders either didn't trade this at the right time, which was when it pulled back into this yellow zone. Either they didn't trade it at the right time, or they got out too early. Maybe they sold, and then they saw hesitation candles coming up, and they just got out for a 5 pip profit or something like that. Yeah. Or they left it too late, so the price came down, made the Fibonacci extension, and instead of taking their profit, just left it, and eventually it came back, and they didn't. They saw their profits get wiped away. The strategy works, you see. The rules are fine, but sometimes we allow our psychology to get in the way of our trading. And we need to try and just do our jobs and then let go. Yeah, it's out of your hands. Once you've set your trade plan up, you've done your job, you've bought or sold, set your stop loss, it's out of your hands after that, guys. I mean, unless you've got a couple of billion, you know, okay, then it's different. But otherwise, just do your analysis, set up the trade plan, execute as per your strategy rules, and the rest is down to the market. You cannot control the market. Yeah. So the question's also asking about books and literature to read on trader psychology. Now I know there was a book, I can't remember now what the guy's name was, might have been Mark Douglas, but have a quick look here on the FXPRIMUS website. Just 1 second. Okay, so right, so on the FXPRIMUS website, I can't remember where I saw this. Right, hold on a moment. Where did I see this? It says meet the team, learn to trade trading videos. Learn to trade trading video. I think it's here. There you go. So look at that. Trader psychology, there's 10 lessons here. Yeah, so maybe that's something you want to have a look at. It's education, learn to trade, trading videos on the FXPRIMUS website, and then you've got 10 lessons here on trading psychology. Yeah, so that's probably a good starting point, and see how you get on with that. But as I said, I'm gonna try and do a 1-hour webinar on trader psychology. I'll sort of find some time in the next few weeks, and I'll do that. I'll do that as well. Okay. Question: I do not know anything about trading, how to start, how to understand moves, how to read graphs. Okay, well, that's, you know, that's the course. Whoever sent in this question, I do not know anything about trading, how to start, how to understand moves, and how to read graphs. Yeah, so that's what that course does. That's what the videos I've done over the last few weeks, that's what they do. So you go to education, I think they're here under webinars. Yeah, and yeah, you've got you've got 15 videos there covering anything from indicators. I've gone through a lot of indicators, how to read a chart, how to read, how to use different indicators, when to ignore them, how to set up trade plans. There's a lot of really good information there, guys. So yeah, whoever sent that question in, you know, that's lesson number 1, webinar number 1. That's for you. I've got a few similar questions like that. How many pips should I? What's this question here? I'm more focusing on US index dollar trading. What is the best time to trade US index dollar? What are the effective indicator can be applied for this chart? I am more focusing on US index dollar trading. What is the best time? Okay, so this question is someone from someone who likes to trade the US dollar index, from what I understand. Why you want to trade the US dollar index and not the actual US dollar against the currency like the euro dollar, for example, I don't know, because the euro dollar is pretty much mostly the US dollar index anyway, and just a far tighter spread. But anyway, what is the best time to trade on the dollar? Do you mean time frame? Because again, unfortunately, there is no such thing as a best time frame. I need a bit more information. Obviously, if you're somebody who you're going to be sitting in front of the chart for only, it depends on, you know, are you trading, are you a scalper, are you a swing trader? You know, that's, so obviously you're going to use, that's why you use the different time frames. You don't use a time frame just because it's better than a different time, another time frame. You use it because it suits your, what you're trying to achieve. You know, you're trying to achieve a position trade, for example, that's going to last a week or a couple of weeks, a few weeks. So you're therefore looking at a daily and a 4 hour. And but if you're looking, you know, to trade just for 3 hours, then you're not going to look at a weekly or daily chart. You're probably going to be looking at an hourly chart and a 15-minute chart and a 5-minute chart, you see. So yeah, best time frame, effective indicator. Again, guys, there's no one best indicator to use on the US dollar index or anything, any asset really. And other questions here on how many pips should you try and make each week. Again, guys, don't try and set goals like this. The markets are very different day by day, week by week. Yeah. So if you've got a month where you've made 2,000 pips, and then you've got another month where you've made 500 pips, it doesn't necessarily mean that you've underperformed in the 500 pip month. You know, maybe the market just moves much less that month than it did when you made the 2,000 pips. It's not necessarily down to your performance. So focus more on the tools that you're using, how to set up trade plans, how to manage the risk, i.e. stop loss goes where, don't put the stop loss too close. We did all this sort of stuff in the webinars as well. You need to make sure that you follow your trading rules. You know, you always enter at support or resistance. You need to keep a diary of all your trades, and that's really important, because if you have a diary of all your trades, then you have something to go back on and review, and you can see each decision that you made and what happened, and you'll be able to see if you're being swayed by your emotions, by psychology, yeah, or if you're actually sticking to the rules. All right, we've got a few questions here regarding some very basic things on Forex. Guys, this is all in the very first webinar. Yeah, things to do with, if you're asking questions about pips and what is Forex as compared to stock markets and things like that, basics, the very early stuff, you're completely new, go and watch the very first webinar I've done, and it's in there in that it's recorded in this members area here. The very first webinar will be great for you because it explains all the very basics, etc. So please go back and watch that in your own time. And then just move through the webinars after that. You can learn the basics, you'll learn some indicators, yeah, all in the webinars. You start testing out the indicators on a demo account, and eventually you'll decide on 2 or 3 of your favorite indicators. Yeah, you'll keep trading on the demo account just using those. You'll be setting up trade plans, putting stop losses not too close, you know, at the right area, so above resistance if you're selling, below support if you're buying. You'll document all your trades and their outcomes. Yeah, you'll review periodically what you've done and monitor what where you're going wrong. Yeah, are you following your trade plan fully? Following the same, you know, the same strategy. Now, I've done a webinar. I think one of our last ones was a webinar giving you a few trading strategy examples. I think that was the one on Thursday. So I've given you a few trading strategy examples to follow. Yeah. And so, yeah, all these other questions about best time frame, best indicator, guys, trading, it's not a science like that. It's more of an art. So it's a matter of analyzing and coming up with the higher probability approach to buying or selling. Yeah. As opposed to just use this indicator on this time frame and it's brilliant. Okay. Other questions? Okay. Right, guys, I hope I've managed to give you some answers. Please go and view the recordings. They've got a lot of great information in those webinars if you want to learn how to trade, and it's free, guys. So yeah, you don't need to spend thousands of dollars on an amazing weekend course. It's all there. Yeah, I need to do something on this, on psychology, and I will do. Yeah, and a little bit more on money management. We did touch on money management in one of the webinars, but we'll do a few more bits, and I'll arrange something with FXPRIMUS to do some advanced webinars next month. But everything in that initial course is more than enough to get you started trading, and you know, with a bit of practice, start making money on a demo account. And if you practice that on a demo account, you'll have an opportunity to learn without losing any money, you see. So, you know, please do take advantage of the demo account. Right, okay. Well, thank you very much for joining me. Thank you to FXPRIMUS again for hosting this. It's been a real pleasure, guys. Thank you for your cooperation. Trade responsibly, guys. Take care. All the best.